there, creative. Have you heard the term owner draw, but you're not really sure what it covers? Are you sure you understand all the types of transactions that can be considered an owner draw? That's okay, because in today's video, I'm going to go through owner draw and lay it all out for you. So let's go. First, let's define what an owner draw is. This is any time you take money out of your business to finance or cover or pay for a personal item. This pertains to sole proprietors, DBAs, LLCs, and even S corporations. However, if you're an S corporation, these are called owner distributions, but they're exactly the same thing. There are several different transactions that can occur that would constitute an owner draw. Let's talk about the most basic, paying yourself. Most of you pay yourself, and you should. Let's say you take a weekly draw of $500 or a monthly draw of $1,000 from your business. This is an owner draw. This is you paying yourself, and that's exactly what this is meant to be. I would like to note that if you're an S corporation, though, it's important you understand that in order to be an S corporation and be IRS compliant, you must be on payroll through your company, and your owner distributions, because remember, that's what they're called for S corporations, have to be less than your total equity in the company. I know it's a lot of accounting jargon, so lucky for you, I have put a link in the description to my business structure bootcamp where I dive into all of this and help you sort all this out so you have a full understanding. Okay, so back to owner draw. So that money you pay yourself is definitely an owner draw. Let's say that you're out and about and you either on accident or on purpose use your business debit card or credit card to purchase a meal that doesn't qualify as a business deduction. No fear, I do have a video linked in the description that goes through everything you need to know to understand what meals are deductible for your business. So this meal, because it's not a business expense, it doesn't qualify, is an owner draw because you are purchasing a personal meal with business funds. The biggest one I see, and I think the most confusing one for most people, is estimated tax payments or paying taxes due after you file them. Unfortunately, unless you're a C corporation, there is no actual business tax. I've also linked another video that goes through everything you need to understand about that in the description as well. All taxes for LLC, sole proprietor, DBA, and S corporations flow through to your personal return. So these are personal taxes and should be paid with personal funds. But a lot of my clients will pay them with their business bank account, which makes these transactions, you guessed it, owner draws because you are paying personal taxes or personal estimated tax payments with business funds. The super important thing here is if you are an LLC, that means you have limited liability. You really want to be clear and show the separation of your business and personal by making sure that what you pay yourself is literally owner draw one lump sums, that you're not using your business credit card or debit card to use all these tiny transactions through your business like it's a personal account, because you start to create doubt within that limited liability of if you're treating your business as separate from your personal. And I go through all of that stuff inside of my business structure bootcamp, which I've also linked in the description just for you. Now tell me, I'm curious, were there any of these that surprised you? I'd love to hear. Please post that in the comments. I hope that shed some light on this topic for you. If you're interested in learning more about these types of topics, I'd love for you to join my free Facebook community. You'll find the link down below in the description for this video. I hope to see you there. Don't forget to subscribe.